Hello and welcome to this week's episode of the Stock Market Update. Today's date is November 18th, 2017. This is brought to you by Conservative ETF Investor. I am your host. My name is Ken. Let me move my picture over here for now. Right about there should hopefully be good. So here we are on the homepage of Conservative ETF Investor. Once I'm done with this video, I'll upload the link right here. Scrolling down, we have our current recommendations, and of course this is in the way. Let me bring that out of the way. Okay, the most important portion of this page I want to bring to your attention is our posture. We are still on hold postures for our 4 positions that we currently hold. And if you want to learn more about us, you can go to this Conservative ETF Investor homepage. There'll be a link to it at the bottom of the YouTube video. And also you can see our current recommendations page here as well as about us and about portfolio ideas, which we have over here as well. Believe that I've got on the About tab. I need to update that. I believe that is an old portfolio that I had there. Yes, I'm going to have to update that one. My bad. Okay, I'll get on that as soon as possible. All right, so anyways, you can see here on our current recommendations page our ETF symbols, plus we have one mutual fund, and what those are, how much your percentage of a portfolio allocation that we are recommending to be put into for this very conservative portfolio with a beta of 0.59, and where our buy dates were for our transaction dates and how well we've done in each of the positions. Now, we have done since our purchase dates a total of 12.64%, not including dividends. And since for strictly calendar year 2017, we are up 8.7%. Now, I'd like to take us and jump right into the charts. The charts that I use are from stockcharts.com. And I like to use a weekly time frame. Let me get rid of that inspect mode. Okay, and so you can see here weekly. Each one of these candlesticks represents 1 week of action. I use a 5-year time horizon and put my information in the chart from there. The first chart is the S&P 500, which is symbol SPY on the New York Stock Exchange. Had a lost 0.09% for the week. You can see that SPY, the S&P 500, has been in this upward trading range for quite some time, and we are right in the middle of that channel. The thumbnail, you can see how it's kind of peaked and softened up a little bit and came down slightly. We use 2 momentum indicators. The top one is the MACD and the bottom one is slow stochastics, both at default settings. The MACD has topped and is traveling towards its signal line, and the slow stochastics is above 80 but below its signal line and dropping towards 80. And this is just dividends down here. So again, we're on hold recommendations. We are going to remain on hold, see what's going to happen with this ETF, but if it begins to break down, we will exit this position. It's the bull market has been quite some time. There is talk of at least a 3% correction coming into the S&P 500 very shortly here. Let's see where 3% would take us. If we were to drop down 3%, it would take us to approximately, a little hard for me to get 3 exactly. Let's see, I almost got it. There it is. It'd take us down to 250.19. I've got a sell order in well below that at 239, which would take us down to a loss of from our current highs of 7.53%. That means we'd have to break this support levels here and here. So I'm looking to see for it just to maintain that. If it breaks these supports, then it could potentially come down to, I don't know, somewhere over here, another 4% drop over that. But we'll see what happens. Or it's a strong bull market. The bull market has been strong. Everyone knows it. Next chart is VEU. VEU is the Vanguard All World excluding the United States ETF, symbol VEU. Get rid of inspect mode. We have a 10% allocation in this one. By the way, in our last one, we had a 40% allocation. This one is a 10% allocation. VEU lost ground over the last week's trading action, losing 0.17%. You can see over here in the thumbnail how that has also peaked and come down, and now it's trading in this last week's trading range here. But you can see the upward wedge pattern that this ETF has been trading in for pretty much all of 2017. Very, very, very strong for 2017. Going over to our home page, you can see here that VEU is up 24.12%, not including dividends. If you include the dividends, it's up 26.93% since our buy date of 11/21/16. So tremendously strong run in VEU. All right, going back over to our chart and looking at our momentum indicators, you can see that the MACD has been running flat, is below its signal line and traveling down. By the way, I do notice what's considered a negative divergence here in the MACD. And I'll show you what I mean by that. You see that from this peak to this peak here, how the MACD has pretty much been flat. During that same time frame, the chart for the ETF VEU has been traveling up. So it's not been keeping pace, it's been traveling flat. It does that for a couple of reasons, but the most important reason is because the momentum has just been kind of steady, slow and steady all the way along. And that's one of the reasons why it would create a flat to even downward MACD, because the MACD is a moving average convergence divergence indicator. But when you do see that, it is kind of a warning sign that that this ETF can is beginning to get top heavy, and it's going to roll over here, roll over here, and so forth. So you can understand here as an example. Let's see here if I can pick out one here in the chart. Looks like I don't have a really good example of that anywhere else where it was kind of flat and the market kept going up, and that responded in the last 5 years. I don't have good examples of that. During this flat area here, the market was flat. Here you're going up, but then the whole thing kind of rolled over, and that's when it went below its signal line, or it's below its signal line now. But I didn't really see the divergences that I'm looking for. Okay. All right, so anyways, that's VEU. We've got a sell in here if we have a close below 52, and we are currently at 53.97. Okay, so I see that drop there. So I do have a fairly tight stop in on this. Absolutely a tight stop. I'm not really giving it much wiggle room at all. Let's see where that is from where our current position is. From our current action, that's a loss of 2.62%. If you wanted to loosen that up, you could go below this, give you 5.6% of wiggle room from our current position. That's right here, this support level right there, if you wanted to put it below that. give you a little bit more room. And then of course over here you got more support just below that. After that, then you're kind of coming down to these peaks over here, 48.36, and then continue to drop a little bit right there, a little bit right there. So it's all over the place. Okay, let's move on to our next one. Our next one is VNQ. VNQ is the Vanguard REIT, which stands for Real Estate Investment Trust ETF, traded on the New York Stock Exchange, had a negative week, losing 0.33% for the week. You can see that this ETF has been traveling in this trading range for all of 2017. Up, down, up, down, up, down, up, down, up, down, up, down, and now up. We are right there. Actually, I am trading this one right now as opposed to investing it in my account. And that is why I actually put a sell order in at 85.27. So I actually exited this position during the week. You can see that there was a high here during the week of 85.48. So my trigger got executed. I'm hoping for the ETF to come back down and be repurchased in this area at the support level. Trying to ride that wave out and just eke out some gains on this position. But for the purposes of ETF, conservative ETF investor, we're kind of close to a buy and hold. We're not really a trading mentality in the the portfolio that we're tracking with that particular one. So that's not really what that's all about. But you can, as an individual investor, it's your money. You can do whatever you want. And in my particular case, on this one, I chose to exit the position here, and I'm hoping to recapture it at a better price. Okay. On the momentum indicators, you can see that the MACD has been traveling back and forth for quite some time, which is exactly what the ETF has been doing. And also on the slow stochastics, pretty much between 50 and 80, boom, 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 boom. So we'll see what happens with that. Okay, by the way, this is a pretty good yielding investment, yielding currently 4.66% annualized. Okay, let's move on to our next chart, which is OSTIX Mutual Fund. This particular mutual fund here pays a nice healthy dividend of 4.64%. We have a 25% allocation in this portfolio. This is the Osterwise Strategic Income Fund. And it has had a negative week, losing 0.26% for the week. You can see the red bars right in there. This mutual fund has done quite well since the bottoming over here at the beginning of 2016. It has done real well and to pay that nice, beautiful dividend. So the duration on this particular mutual fund is 1.5 years, which, if you know anything about durations, speaks to how much volatility to expect in this bond fund when interest rates rise. So the lower the duration, the less risk you have. So with the 1.5-year duration, there is risk, but the risk is extremely minimized, and it is paying a very good dividend for the risk that you're accepting in this particular mutual fund. And let's come over here to our two indicators. So our MACD, you can see how that has been topped and coming down, and during the time that that has topped, this fund has gone up. So again, a little bit of a red flag, not a reason to sell, just because you see that. The reason to sell is when you break support levels. That is the reason to sell. A great example of a reason to sell in this particular fund is if you break I have two moving averages in here, a 17-week and a 43-week exponential moving average. So if you were to break the red moving average, that would be a very good reason to exit the position. That would have saved you the pain from here to here. You can get whipsawed as you did here, where you broke the red, you would have exited, and then you would have wanted to come back and purchase. Now you would have come out at somewhere along a wash, rode that up, but then you would have wanted to exit here and then rode up this nice wave right there. And then underneath that is slow stochastics. We are below the signal line, and we are at, what are we at? 78.47, so we're below 80. So it is showing signs of softening. So we absolutely are softening. You can see it here with the two red bars. The question now becomes is how soft is it going to get? How much of a correction? Is it going to be this little blip here, little blip here and here, or is it going to be something more meaningful like this one? So we have to wait and see. But we are currently on hold recommendations, as you know. Now let's move on to our next chart. Our next chart is the VIX. This is our second to last chart for today. Now the VIX is the volatility indicator pretty much for the S&P 500, and it's an inverse indicator. As this indicator goes down, the S&P 500 goes up. As this goes up, the S&P 500 goes down. Now I've got two moving averages in here. The blue is the faster 50 day. By the way, these are daily charts. Each candlestick represents 1 day of action. So we're no longer in that 5-year weekly chart range, which we were on all the previous charts. Now we're moved over to daily charts. Each candlestick represents 1 day of action. Now, the faster moving average, the blue, has bottomed and is trailing up. And the indicator is above both the slow and fast moving average. If it continues to do that, it will drag that 50-day up and begin to do a crossover, which will not bear well for the S&P 500. So we are watching that. And here, but that's basically where we're at with this indicator. The risk levels have come up, and we're waiting, but not terrible. I can see that we've been trading inside of a range here. I've got some trend bars there. So this one here would be a resistance. This one here is a support. You can see where it pretty much just came right up to this resistance level and just bounced right down off of it. And here's a chart of SPY, the S&P 500. Let's see here. During that bounce, when it came down, you can see that the S&P 500 came up. As a matter of fact, let me just go over to the S&P 500 real fast. So if I go to a daily and you just look at the last 3 trading days for the S&P 500, this one, and this one, you can see that we pretty much bottomed and then jumped back up. So that would be this day here, this day here, and this day here. So looking at that on a percentage basis, if you'd have caught it from the low, see what the extreme difference was there. That looks like it was a difference of 1.17% is how much that was. So, okay, so that is the S&P 500. VIX, last chart of the day is the VXN. QQQ, which is the NASDAQ 100, is not in our portfolio, but I track it because generally speaking, when the market is strong, the NASDAQ 100 should lead the S&P 500. When the market is weak, the NASDAQ 100 should lag behind the S&P 500. You can see that we are trading in an asymmetrical triangle, and this is support, this is resistance, and we are right now at support. So I'm looking for a bounce in the NASDAQ 100, symbol QQQ. Down here I actually have a chart of the NASDAQ 100. Move this out of the way and get you to see that. See, that's QQQ right there. And with the VXN, if it does hold support here, bounce and come back up. While this travels up, again, it's an inverse indicator. The NASDAQ 100 will come down. So the VXN will bounce, but the QQQ will come down. And so it's looking as if it's going to be soft over the next week, is my interpretation of the VXN. We are on all hold recommendations, as you know. As I explained at the beginning of the show, current posture, hold. We are not trading. We are going to sit tight for another week and watch the action. All right, so that is the market wrap for today. I'm your host. My name is Ken. I hope you've enjoyed today's episode. Please click on like, subscribe to the channel, and I'll see you later.